Hello everyone and welcome to our fifth series on the lectures on capital markets, and I am your instructor Jamal Haider. So during the course of this lectures we are following the textbook Capital Markets, Institutions and Instruments. It's fourth edition. It's by Frank Fabozzi and Franco Modigliani, these two authors. So today our agenda is that we are going to cover chapter 11, which is Common Stock Market, part 1. So the objectives or learning objective of this whole chapters, it is that after the end of this lecture we are able to answer these questions: that where stocks are traded, categorization of markets in terms of exchange listed stocks like national and regional exchanges, NASDAQ listed over the counter stock, and non-NASDAQ over the counter stocks. And then 4 types of markets where stocks are traded: first, second, third and fourth. And then we are able to answer structures of New York Stock Exchange and NASDAQ, alternative trading systems, ECNs and cross networking, electric communication networks, alternative available to a broker for trade executions, and then role and regulation of dealers in exchange and OTC markets in the USA, and then reasons why issuers raise equity funds outside their domestic market. So let's do it ASAP. So overview of trading locations in the US. So there are 2 basic types of trading in the secondary markets for equity. So why not we are going towards primary market? Because primary market, it is the first issuance of the stock, right? So all other trading activities, they have to conduct in secondary market. So organized exchange, also called central auction specialist systems, which are specific geographic locations called trading floors, where buyers and sellers they meet and they conduct transactions. So the trading mechanism is the auction system, right? Let's talk about stock exchanges. So stock exchanges in which listed stocks are those that are traded on the exchange. So the right to trade securities or make market on an exchange floor is guaranteed to individuals or firms. We call that members, or who buys a seat on the exchange. And there are 2 kinds of stocks that are listed on the regional stock exchanges. Stocks that could not qualify for national exchange, and then dual listed stock which are listed on both regional and national exchange, right? So the difference here between these 2 slides, the important point is that on listed stock exchange, the right to trade the securities are given to members who hold the seat of the exchange. Now coming towards the OTC market, the OTC market or over-the-counter market, it trades unlisted stocks. So dealers make market in stocks and trade with each other and with retail customers. Bid-ask spread are the main source of the dealer's profit. So remember, bid-ask is dealer's perspective. If individual investor want to buy, then the dealer will give him ask, because dealer want to sell and investor want to buy. And if investor want to buy, dealer give him ask, and if investor want to sell, then dealer will give him bid rate. So the National Association of Securities Dealers, we call that NASD, NASD, it regulates this OTC market. So the third market is the trading of the listed stocks in the OTC market by dealers not members of a exchange. Right? So it means in that trading of listed stocks are traded by those members who are not the members of exchange. So dealers that make the markets in the third market operate under the regulatory jurisdiction of NASD, NASD. Right? So we have first market, which is exchange market. Second is over-the-counter market. The third market is in which listed stocks are traded over the counter. And then we have fourth market, which is the alternate trading system. Fourth market is the direct trading of stocks between two customers without any use of brokerage. So this is the direct trading of securities among institutions, thereby avoiding brokerage and dealer costs. So here, electronic communication networks are privately owned brokers and dealers that operate as market participants with the NASDAQ system. So in the fourth market, we also have electronically communication networks. So it means they are privately owned. So brokers and dealers that operate as market participants. And in limit orders, so limit orders book open for continuous trading to subscribers who may enter an access order displayed on the ECN. So in electronically communication markets, you have to buy subscriptions. So only then you can see or you can access the displayed order. The fourth market of the alternative trading systems, and we are continuing this one. So the largest ECNs, electronically communication networks, here are Instinet, NYSE Euronext, Archipelago, and NASDAQ Brut. And then we have crossing networks. In crossing networks, these are the batch processes that aggregate order for execution at specified time. For specified time, batch orders are processed. Plus, it provides anonymity and reduced cost and are designated to minimize trading costs. So in crossing networks, what happened? Two benefits are that it is anonymous, means the buyer and sellers, their information is kept secret, plus costs are reduced because batch transaction is there, so costs are reduced. So here systems developed to allow institutional investors to cross trades, means matching buyers and sellers directly via the computer. So example of this crossing network is the investment technology group. So here the ITG, which is investment trading group, POSIT. So this crossing network is more than a simple order matching system. So rather it matches the purchase and sale of portfolios in a way that optimizes the liquidity of the system. Common Stock Market Part 1, Chapter 11. So the summary here is that common stock represents ownership or entity on a corporation. Secondary trading occurs either on the NYSE or New York Stock Exchange or American Stock Exchange, and 5 regional exchanges and the OTC, over the counter. So listing of internationalization or international shares through GDR and ADR, Global Depository Receipts and American Depository Receipts, it reduced the financing cost and broadened the ownerships. Right? So we have your class assignments, assignment number 5. So I'm going to show you how you can open this by clicking here. Just end the slideshow and double click the assignment here. The assignment is going to be open. Try to solve this assignment, and for now our class is finished. See you in our 6th lecture. Until then, take care. Bye-bye.